Alright, Judas. I promised to send you guys a video of every trade I take, and then I feel like I'm taking two trades and I have not posted it yet, and I've not given the breakdown. I'm sorry for that. I'm going to do. I don't want it to be to be much on the playlist. So I feel like after picking two or three trades, then I should do the video and the breakdown of every single trade I take, like on that particular hopefully we understand. So I think like 2 to 3 days, I should just do the breakdown. And today is Wednesday, and this is just 9 o'clock after 9 Nigerian time. And then I take trade on Monday, I take trade on Tuesday, then I'm going to do the breakdown of those single trade I did. So those trade I took, right, I posted the loss, I posted the profit, I posted when it was actually so, and then I'm going to show you how I take that. So, first of all, right, on Friday, I made my analysis, right? Let's go to the other country and let's see. Let's go to something and let's see what's really happening in this other country. So, this change of character occurred from a protected eye, which is from the one daily time frame. I think actually from a protected eye, I don't know why I took this way. Not this way. So yeah, let me just go there so you guys can see and understand. So from the protected eye and how we go from the protected eye, let's break it down very well. So this is look at it here. Let me market this structure right here. Sorry, market this structure right here. At this point we will protected, then we take out movement right here because this movement at this right and then we have a value break of structure. So when market came back from this point towards this point, they appear from the then we take out another improvement right here because this improvement is just short out. So as a break of structure. So then we have another perfect growth. So um, value break of structure. Therefore, we have another improvement right here. Right? We have this. This is improvement, right? And then this is also um, what's it called? Engineer liquidity. Then what happened? The consider market. We know that the data structure, the market took out the information from that to the liquidity and then posted this so that application. Okay. Therefore, so when market do that, right, and then value data structure, right? So and then before it does, we have a video right here. So let's mark out this video. Then we have another what we call uh, filter right here. Then this one should be our other block. So let's mark out this other block. Let's make this right level be high because this was the past beta. So let's make this level bigger than others because that would be our other block. So let's make it 4 times, right? Bigger than this combination and this combination. So now when market gets there, so therefore, we want to buy this trade. We want to buy right here. We want to buy from this other block. What will be our stop loss? Then our stop loss should be around here, right? Whenever our stop loss is around here, let me go. Let's mark this not another stop loss because it's protected out. So what that protected out. So so when market tapping, see market get into the protected eye, right? And then just strip it by week. So and 2 times in below, this is very time. So 2 times in below of it will be 1 hour, right? So when you go to 1 hour and so you see that that should be within the character. We have a break of structure right there, we have within the character. All on this protected eye, which happens to be a strip on the other on the data frame. Now note something that since we have a break of structure, right, that broke this protected eye and this 1 hour time frame, know that market when next market comes here, we should have also another break of structure right here. So we should be expecting a break of structure right here. It means if you're looking for buy from the long run or from the higher time frame and to swing through, we should be having targeting this point as a break of structure. You understand? So right, so we now see a change of character right here, and then this should be, let me just clear this so the chat will not look off. Let me clear this right. So the chat will not look off. Then this, right, and then this, right, so the chat will not look off, right. So then we know that, okay, remember that in market control there should be a bit of structure, right? Because you already have a bit of structure, right? So, but on the other time, it is just big, like big rejection. Therefore, since you have a bit of structure and looking from all these past data, and you not you agree with me that um, this point right here is a protected level. This point right here is a protected level, right? So until market takes out this level before we see that daily time frame is now ready to sell totally. Do you understand? But even as much as market will not take it on that daily time frame, take this low, this protected low, then we are still looking for buy. So any scenarios that occurred around there should be over. So now that market, you already know that we should be buying from here. This point should be our like data or a key level for us to to always observe. So when market gets into this scan, we should be ready to buy. So market is already at the premium right here, change character. Therefore, let me just transfer this protected. This is the protected, but on the at 1 hour time, the market has swept it away, right? So market breaks structure above it, right? But on the daily time frame, market just strip it. And then if you notice that one daily time frame, it's like it is double top, right? Liquidity, you can see, right? First top, second top, right? And give and don't can over this IFC, right? So on the 1 hour, back to the 1 hour, right? So you should already know at that point with attract price because that's the double top, right? If you attract price, the market will want to take that price away. So on this 1 hour, I will not even say this is change of character, but I will just say this is the change of character. This is the change of character, right? So, right? You know why? Because if you follow this eye, you follow this movement, right? You have this eye, and in this eye, you have this eye. On this side, we have this low eye that gives us a bit of effect. On this side, we have this low. On this side, then we have this one did not break structure. This is the eye. So you will not use this low, rather you will use this eye. Okay, sorry, right? So therefore, market shape away, right? And since market shape that eye away, right? Where will be our next leg? Now, there is type of entry model that I use, right? This let me give you an instance, right, of what I was expecting around it. So when you have a change of character like this, we have a change of character like this. Now the first two one used to be the engine. Now when market works like this, and then market did not um, come back to this level, right, to this other level and drop, right? This is the first model. You can have something like this. This one happens to be engagement, right? Happens to be engagement. Right? Then we have level right here. Then or we should expect when market give us this move, right? And change character like this, right? And give us engagement. Then the engagement might just be set away by little bit. And the market comes back, then you can just sell like this. Just like what happened on the day. I'm going to show you guys. Like then you can just sell something like this, right? Something like this. So you just look for yourself. Why? Because it has been swept away by an IFC can just click then you just sell. You understand from there. So it's not going to come back towards this sorry. It's not going to come back towards this other flow that you are expecting is there. Just strip out this one, then break structure, then after the break of structure, you should know that you are literally selling, right? So you can see the difference between this type 1 and type 2. So let's call it type 1 and type 2 entry, right? We have different types of entry model. So if you want to learn personally, you can just join me and then I might teach you through the type of entry model that I use personally. Right? So that's just it. So this is another entry model. So now look at how this one is now looking right here. Right here, we have reaching the character right here, right? And we right CH right here, and then we have this point as first business. So let me take out this protected eye. You already know everything is happening in the protected eye, right? So we have this first engagement right here, right? So normally when asking where are you supposed to buy, because this is the first pullback after the change of character, right? So this is the improvement, right? So if I'm asking where will be our exchange POI, they will say here, right? So here can also be dangerous. Like you see here, right? Because we also have a trigger logo in it, right? So this is our exchange point of interest. Now, sometimes market may just come like this, tap it, not getting to this level, tap it, right? Let's say improving a bit the trigger logo, then sell, break structure, then come back, and then we sell massively. You understand? So it's so you just look out for such entry model on the chart. So then I keep on following. I mark out all this on Saturday, and then weekends for studying. And after you study, you can go for play, and you have to just play out, right? So you will not be bored, and your goal will not be filled. Okay, so then I mark out this point as this level as snapshot, right? Start monitor, and then this point as extreme your extreme QR. It's not like I'm going to just exactly from that point, but I'm going to just watch out for that point. Why am I not going to take you with that information? Just because of my attention is looking at the top, right? And then I just have to make let my test it and change character then I sell it. So that's why this point is just point of this place will not be my smart. Why is this point? Because here right here also that's also improvement, right? So this means that this smart trap can also be a change of character and sell a bit further. It means you can still be trading this smart trap. You can still be trade on this particular smart trap. So but also remember that there's engagement there are liquidities, there are liquidities, and if you see this liquidity did not take any liquidity, they say that it doesn't take any liquidity, so you just have to be careful. And that was how I went out that money. So when there was this drop, right? Let me play this. Let me play this. This I'm looking for market to come into this level. Right. So when there is this massive drop to the downside, right, then sorry, delete this here, delete this, and this. So when there is this massive move, this nicely we call it liquidity void, then market has to do some correction towards this liquidity void, and then I think this liquidity will just restrict us to B or will get into the extreme. But I'm seeing that this liquidity should not be taken out a bit. I'm going to show you a case where such happened and gold. It happened yesterday and gold. Was it yesterday? I see a chart like that. Right? Let me show you. Um, so then I just want to take the pullback. You understand? I want to take the pullback. So we go back to the daily time frame right here. And see that market is already past at the 50.0 Fibonacci. So anything that happens at this 50.0 is always taking it of it. So let's go back to 1 hour. So right here, market already around this moment, right, your market already at the 50.0. Then I see this break to the upside. But now the mistake I made, right? Because it's always good to reanalyze your mistakes and see what happened. So the mistake I made, right? This is it. So remember that this point created this high, then this one created this low, then we have a break of center to the upside right here, right? Now you will now notice again that I want you to notice something. So you will see the mistake I made together, and then you don't fall in that mistake. Now the mistake again is you will now notice that this low, right, came lower than this low. That is, this is a lower low, right? So we'll say when market moves from right here, market created this high, then we use this low, not this low. We use this low, right? You understand? Because this is a group of structure, the market takes out this engagement. Then if this are given a group of structure, right, then we'll say this is an engagement. So It's just that we have slip of the eye. So this is still engagement. Do you understand? It is still engagement. If this was broken with body of the kind stick, right, allow the break of structure, then and then we have this protected layer, right? Then we have this one also close, this point also close with the body of the candlestick, then this protected layer would have been solidified. You understand? But it's not something like that. Then just I don't know, maybe I'm not sure the get change anyways. I think I see it wrongly and then I accept that mistake. So then this is my liquidity, right? So this liquidity has to have a greater structure, it doesn't have a greater structure. So now tell me, why do I have to take my trade right from this rejection? So you see that there is a mistake there that I made. There is no valid structure neither. So what actually happened? Why did I take my trade right from here? It's not something I should have taken. Like this is a rejection bell and I should take from the 50.0, right? But neither that I actually took from this trade and I don't know. I don't know. Did I see it wrongly? So I think I made that silly mistake, and that silly mistake is very, very annoying. Like this is 20, almost 25 days now. So imagine I was even setting my stop loss inside an institutional reference, of which this is a rejection belt. 50.0 should be, I mean, the consequent expressions would be the where I set my entry, and then my stop loss will be below it. And then I would have risked just 15 pips as my stop loss, right? But I don't know anyways. So I took the trade right from here, aiming to just target this level right here, and then just 3 times of loss, I mean of my risk, just 3 times of my. So this is yeah, I was aiming something like this, and doing something like that. So and then get taken out. So now, how did I do the comeback? So I, I think I did the comeback because I made the profit back. Right, I made the profit back on this. Now, there's one thing that you guys should learn. When you take a trade and you had a loss, for you not to avoid being revenging, right, or avenging that trade that you actually use, stay a bit calm and reanalyze your chart properly. Look for why you made that error. If not because of I see my reason why I made that error, I wouldn't have taken my profit right here. I would have made the same. I wouldn't have taken my profit right here. I would have made the same error. You understand? So this is what I did. After I had this loss, then I came back again. I analyzed my chart. So all of you, you should try to assimilate and learn that thing. So if you make the first loss, which you might think, okay, it's normal, it's still just one loss. If you make the second loss, don't make the third loss a call. You understand? We analyze the chart properly. If you are trading on that with that particular actor, you understand? If you take the first loss, if you take the second loss, if you take the third loss, that's where you are revenging, obviously. But if you take the first loss, I wish you see, okay, it's normal. Well, maybe market does that, maybe I make a mistake. Try to look for the mistake. Take your trade on the second trade. If you now make the second loss, now calm yourself totally and reanalyze from the very beginning of the higher time frame down to where you are and see if you still make mistake, right? And if you now see that you make a mistake, then don't be eager to take that trade because then you say, ah, wow, I've seen my mistake. I want market to go. Don't be too eager. Just wait for it to calm down because if you are too eager, the emotion or the spirit might just push you to say, okay, let me just sell or let me just buy to get my point of interest so I can take the profit. No, just calm down. Wait for market to come into that zone that you want to like, and you see that you make your profit back. So, like what I did here, right here, right, I made the analysis, right? So when I see that we have this sweep of rejection and then it rejected from this rejection block, then and this is 1 hour time frame I went back to 15 minutes time frame. Okay, sorry, let me just go back to 1 hour time frame and mark out level right here. Mark out this level. Let me delete this so it will not be off on the chart. And then I will analyze and mark out the rejection block, right? And after this rejection block. So as you can see that it is the consequent expression, right? Let's see. It is the consequent expression, then rejected. Now, this rejection gave me a story. Let me now go back to 15 minutes time frame, right? At which I will see the structure very well. So now look at the structure, right? We have this rejection and then beta exit candlestick was given. So my entry time frame should be 5 minutes time frame. Then I see a reason why I should actually buy from that point. So now look at it mapping out. This is the change of character, right? This is the change of character. The market grows massive right from this point, from this level, and go right here. Because it's my entry time frame. My 15 minutes time frame goes structural time frame. Right. So I waited for market to just tap into this level after I've seen this post engagement, tap into this level, right? So I set my stop loss just right below right here. You see that I calculated here, I calculated this level. And as you can see, market actually delivered into that level. But not something. Right? I did not just target this point, but this is my main target. Do you understand? Not something. I didn't just target this point, but because is still my eye is still on this level. I'm still watching out for market to take up this level, right? So if market has taken this level, right, because of I still just want trade, I open just one position, right? Then if market has taken this level above, right, I will leave my trade with break even towards this area, right? But now this point, right, when I got right here, this one when I got right here, then I see that okay, this one should be my normal take profit as a day trader. This is my normal take profit because I took my info from the lower time frame. That is just the change of character at the lower time frame. Then the recent I should do my take profit because I have a trading range right here and here is my trading range. So and then I see that okay, if market obviously reacted because this is a break of structure right here, right? And that is from this high to this low to be our trading range again. So where will be my area of value if I want to sell from this point? If I want to sell, like I'm following this current trend. So mapping it out always, this should be a fair value gap of the union, right? Sorry, let me change it to continue to yeah. So and then I see that we have a broker structure right here. We have a broker structure right here. We have a broker structure which was transferred right here. Then we can see that we have also a broker structure right here. Then which initiated that this right, and we see that market just straight out this way. That is, this is also a protected low, right? A protected line. Do you understand? So having this as a protected line, the regular level or any level of Fibonacci should be the interesting part where we should self-run, right? So which happens right here. So because of the change of character, I know that I should not go further away to this point, right? Or to this point right there. Do you understand? So that was why I just had to take my profit. That's the and guess what? I took my profit and I recovered that profit loss I had, right? That I made the mistake of, right? So this is how I took that GDP US dollar, and then I took gold again as extra profit to get. So I took gold also as extra profit. So right I'm waiting for market to tap into this point, right? Then I should buy. I just aim 3 times of what I'm risking. Just 3 times of what I'm risking and which it is, right? Okay. So 3 times of what I'm risking to 5 times of what I'm risking is my normal target for day and swing trade. But I target, in fact, 19, 20 RL, in fact, 25 RL, right, on my trader. Why will I target that? That is when my stop loss is very, very minimal, right? Not when my stop loss is, sorry, my stop loss is just like 7 pips or so, right? That's when my stop loss is around here. Then you can see that when my stop loss is reduced, just 5 pips, the RR increased to what, 7.4. So when my stop loss is increased, is reduced, then and I want to target just this point, you can see that now from just entry to this point, I've close to what, 10 hours. That's when but targeting a whole sum like this, it's not my thing because I already know my age. It's not my thing, right? Or targeting a whole sum like this, right? A whole sum like this, it's not my thing because I know my except if I take the trade from 4 hours time frame, then I will target all of that because it is still 4 hours time frame. I should explain that. But on 15 minutes time frame, I make my entry on 15 minutes time frame. Because I just want to day trade. You understand? I just want to day trade. So I don't think I have to be waiting again all of that. So that is just how, and this is how I am. Why I'm trying to take my entry right here. As you can see, right, we have this as change of character, just like what happened. You have this which was transferred there, and then this happens to be improvement, right? And this will be my decision of the block because this IOC candlestick right has been integrated. So, and then I will wait for market to tap into this candlestick. I will find my entry, and it just 12 pips loss, right? So, if market taps into my entry, then give me profit. I'll be making those 2 points of this 12 pips. You understand? So that's how I have this right today, which is Wednesday, 9th of July, right? And then I took gold yesterday. I'll show you how I took this gold. And then, yes, I still have analysis on gold. I still want it to clear. So now on gold, this is what happened on gold. Right. So on the daily time frame, I love to use 4 hours time frame. In some cases, I use daily time frame. Now on the daily time frame, this would not have a data structure right here, so there is no change of character. Understand that very well. So, and then on the 4 hour time frame, sorry, because that is daily, so I'm going to use 1 hour. So I'm going to use 1 hour time frame. That's daily, so I should be using 1 hour time frame. So on my 1 hour time frame, right here, this is we have a sweep, right? But when you call this a transfer of um, a transfer of data structure, right? Yes, I will. You understand? I will call that a transfer of data structure. And right here, we now have a change of character because market took out engagement, right? And the daily time frame, then we have a change of character. Right here, this is a change of character, a minor change of character. Remember that, right? This is a minor, I thought a minor change of character. This is a minor change of character because we have high, we have low, we have higher high, we have higher low, and we should have higher high, right? But it failed and we have lower high, then we have lower low. You understand? And it might give us a major change of character. So let me write NCHOCH, right? And then let's write MI, sorry, let's just write MI, which is minor, CHOCH, right here, right? So after that, now tell me where is the next unmitigated order flow that we're supposed to target. Now, remember I told you that remember this entry I gave you that I'm going to explain to you on right. This entry I said okay, we can have this change of character first engagement I can sell, and we can have this as um, also our second entry model, right? I can just sweep it above and so you see the difference, right? Now the difference is this one came back to the other flow, right? And this one did not come back to the other flow. So take out engagement first. So this is what happened right here. You understand? Now let's see that clearly again. Like this. Let's see that clearly again. Delete this because I mark it as engagement. So now let's see that clearly again. We have this as change of character, right? First pullback, right? This is the first pullback. So we have this as break of structure, right? So what happened? Market came back right here. As you can see, the market actually swept it away. So I'm going to move it for you to see. The market swept it away. So you can see the market had this sweep, right? Second entry model, right here. So most of you will be wondering that why did I take 100 pips out of it? Right? I know what I'm doing. I know this market is going to take out this level, right? So as you can see, the market actually swept that level away, and then we should aim to target. So when market sweep out this level, remember what time frame it is. This is 1 hour time frame. So we have to go to the 15 minute time frame or 5 minute time frame for entry. You understand? So now let's go to sorry, we have the book of structure right here. So we are going to go to 5 minutes time frame for the entry and let's see what. But remember, they're still on what? They're still on this other bed. So let's see what is happening on that 5 minutes time frame so we can take our trade also on that 5 minutes time frame. So um, this is it. Now look at it. You see that there is no significant reason for us to take our trade. Rather, I will just take my trade right from this point right here. And why am I supposed to take my trade right from this point? This is this is not an implement. This is that I'm not really like honestly, but I wanted to. All right, so this is 15 minutes time frame. Right, so 15 minutes time frame gave us not yet a change of character, right? So I am not supposed to pick that trade, and that was why I took it. So many traders will take this trade right here. Now the difference between us is many traders will take this trade right here, and many traders does that, right? The difference between me and that many traders is just that right here, this should be a change of character, right? But tell me, they will have any break candlestick closing below till it gets into here? No. Right. So it means what? It means it got here, it went out, then market now break it below. In fact, till we get here, it's only this candlestick that closed below. So it means what? Our change of character has been transferred right from here to this level. You understand? Because this is only the candlestick that closed below right here. Therefore, we have this push up. So this is just the only reason why I took my trade right here, and then I targeted 100 pips as just nothing because I know market is still going to come down there from the 1 hour time from that. Yeah, coming from, you understand? Market is still going to target here, and in fact, market is still going towards down, 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 down. You understand? But we still need another confirmation for us to believe the market and all of that. We get. So now I now see, sorry. So I now see that since market has changed character right here, it's best for us to sell. Now, there is a mistake I did. You see that this account, right? This market moved about 50 pips against me, and then I created just this big profit, right? I own this low right here. So I created just this low. Do you know why? Let me tell you the reason why this low against me like that. And I want you to learn, and then all of my mistakes is being written, and then you'll see whenever I want to take a trade, I will not do such mistake again. So this happens to be. Let me clear this out. Let me clear this out. Let me clear this out. Right. Then this happens to be a decisional order flow right here. And remember, a decisional order flow can mean that markets might or might not react from that page, like it is security, right? So this happens to be a decisional order flow right here, and then market respected and sell, right? Now let's go to this is how let's go to another 15 minutes. Let's go to 3 minutes time frame, right? And then we should see what that is all about. So let's do the explanation clearly and understandable, right? This is a bit of structure right here. So it means if this market has moved right like this, then we should have a good change of character right here. You understand? If market has broken that, we should have a change of character right here, right? But market did not. Market reacted and then got another bit of structure right here, right? Then this other flow is what should be the other flow that market should react from. Now, you know why I didn't take my trade from this point, but my stop loss is far above it? You know why? It's just only because uh, I don't want to take this trade like this. Right? I don't. There is no stationary reference point that's going to be integrated. Oh, there is. Wow, there is. So you see, I'm just even coming back to check that, and because I've not checked done the correction or whatever the reason why I've not done that, I've not done that. I'm explaining. So this is if there is a fair value gap and there is order block. So this is the fair value gap right here, and then this is order block. So obviously it means what I should just take my trade right from this order block, then set my stop loss right above this high right here. So it will just give me how many pips? 10 then I will still target the point I want to target, which yeah, right? And you can see that it still makes sense, right? But I didn't see any of it, so I feel that market has already covered that, and then I should be selling from this convention fair value gap, and that's why I sold from this last fair value gap right here. I sold from this last fair value gap, and then I will still should be stop loss as right here around right here. So I will keep it stop loss and just targeted the 100 pips as my take profit, right? So 100 pips, 100 pips, 100 pips. So 100 pips around here, like around here. And then market almost to my take profit, so almost to my take profit, then sorry, almost to my stop loss, then what I do, how do I take this trade from you understand? So now my next view on the is still selling, right? This is our company. This is our company. So not as much of market. This is engagement. This is engagement because people that are still buying the one from this and that, but this is engagement. Then this point should be rejected. So if I say change the character, I can change the time which is 9 to 5 the whole longer. You understand? So that is just everything. So in my next class, in my next page, I will be dropping another one after 2 or 3 days. So you guys should not be bored with plenty of videos. So do well to like, subscribe, and make this channel. But I'll be giving you everything you need to know and how I take my mistake and how I take correction to my mistake, right? So see you guys later. Have a wonderful day. I wish you success.